How are you doing, Instagram, today? We are going to talk about personal finance today. Let's make sure that we are live all over the place. We are. About the steps that you are supposed to take when or before you start investing so that you create investment strategies just right for you. We are talking about long-term investing and not day trading or scalping or options trading or real estate trading. We are talking about investing in the stock market and cryptocurrencies and how to do this without catching FOMO and without having a ton of stress and without being stuck to a screen all day during the severe market conditions that we've been seeing in the past few weeks. How many of you guys are already investing? Put a Y in the chat box if you are already investing. Put a 2 in the chat box if you are thinking about starting building your wealth, but you haven't really started investing yet. And put a 3 in the chat box if you want to create generational wealth and you don't know where to get started. Nick is saying, I want to become a billionaire. Arnold's saying 2 to become wise. God help me. So no matter where you are, this is going to be helpful for you. Now, again, before I get started, as you guys know, the Start Building Your Wealth Challenge is starting tomorrow, Monday at 11 a.m. Eastern Time. We are going to go through the 5-step process on how exactly creating a wealth ecosystem that is going to build generational wealth for you. And as you know, I didn't create my wealth just by investing in the stock market. There were some other things that I had to do in order to build this ecosystem that has been making me a ton of money, $7 million in the past year alone and counting, and what has been helping me not to panic when the markets drop, and in fact, taking advantage of the market volatility. Is that something you're interested to learn about? If you're interested, then you are committed to staying here. If you want to join the challenge tomorrow, obviously go to yourwealthnow.com, yourwealthnow.com. Grab your seats. We're starting in 18 hours, but this is kind of like a pre-training just to get you started so that you can get on the right track in 2022. All right. So not knowing your risk tolerance when you start investing, is the reason why investors panic, catch FOMO, stress, get stuck to their screen all day to check the markets, and lose their money. One of the first things that you need to do, if the first step that you want to take for your wealth ecosystem is investing, you need to understand your risk tolerance. On the other hand, knowing your risk tolerance will help you remain patient, follow your strategy that you created based on your risk tolerance. Go about your life without feeling the need to check the markets every 2 minutes, or even better, start side hustles so that you can fund your investment account, live longer, and make a ton of money in the markets. I actually learned this from my time in Japan. As you guys may know, I lived in Japan for 7 years before I came to America 11 years ago. And Japanese people have one of the longest lifespans in the world. And when you ask the oldest Japanese people, what's the secret to their longevity, they say certainly low stress and Zen. Now, how many of you guys put a Y in the chat box if you would like to live a long and healthy life? Put a Y in the chat box if you would like to live a long and healthy life, because no matter how much money you make, if you're constantly stressed and if it's going to cause you different kinds of mental issues, it is not worth it. How many guys agree with that? So put a Y in the chat box if you'd like to live a long and healthy life. So if you do, then you need to listen to what I have to say in today's training, which is about understanding your risk tolerance before getting into the markets. So you guys, this is literally not just about making more money. Knowing your risk tolerance before starting to invest literally is going to save your life and your family's life and anybody that you choose to share your investment strategy with. So those of you who've already gone through my other trainings, how many guys actually have been to my free masterclass? Or how many guys actually, let's put an M in the chat box if you've been through our free masterclass, and put, I'd also love to know who is attending tomorrow's challenge. Anyway, so if you've been in our free masterclass, you would know that I go super deep in this, and actually one of the most boring part of our training, but the most essential. And some of you get stuck right there and don't even move to the next modules, especially if you're in the power course. How many guys in the power course? So that's why today I'm going to do things differently. I'm not going to go super deep in the numbers. I'm not going to share my screen because obviously we're live here on Instagram and TikTok, as well as YouTube, Facebook, and Twitter. But in these two social media, I can't actually share my screen. But you need to get a notebook, get a pen and a notebook so that you can take notes. So, but we're not going to do the calculations. You're going to do it on your own. So we're going to do a quick overview and give you the general understanding of where you stand financially, and then make you aware of it. And those of you who are in the power course, who probably have done this already, and this is still a great overview because things may have changed since you first got started. We have now over 3,500 students in our Make Your Money Work For You power course, but every once in a while, it actually makes sense for you to go back and recalculate your risk tolerance, your financial situation, so that you know what is the exact right next step that you need to be taking. All right, are you guys ready? Let's do this. And by the way, I have caught a cold again. Oh my goodness. And for those of you who've never been to the power course and brand new, just prepare yourself. We are going to jump right into it. Okay, so the first thing you need to figure out is something called a balance sheet. A balance sheet. Okay, so put a B if you caught it. So it's a balance sheet. So what is this super intimidating term? So let's replace that intimidating balance sheet term by, that is basically a phrase that typically shady money managers and financial advisors use just to trip you over so that you think that you can't do it. Guess what? You can actually do this yourself. It's super simple. So we're going to replace balance sheet and with something cooler. We're going to call it, what are we going to call it? We're going to call it cool stuff. we're going to call it my current money situation. That is what a balance sheet is. A balance sheet for a company is also that. And your balance sheet is your current money situation, where you stand financially. Yes, I'm live both on TikTok and Instagram at the same time. I have two phones. That's how. I'm also live on Facebook, TikTok, and Twitter. Woo! Magic over here. All right. So we're going to figure out your current money situation. Are you guys ready? Okay. So the first thing you need to figure out is to get a piece of paper and write down everything that you own. Everything that you own. Write them down. And basically everything that you own that can be replaced if you can sell it in some sort of a marketplace. It could be NFTs, it could be jewelry, it could be real estate, it could be your checking account, it could be the money market, it could be a CD. Basically, it can include any asset that you can convert into cash within 1 year. That is called an asset. So investment assets are things like your 401k, 403k, IRA, education savings. We can talk about personal. You can write down your personal assets like a car that you might own, your equity on your home, furniture, a boat, clothing. You can sell your clothes in Facebook Marketplace, can't you? Basically assets that you use to maintain your lifestyle, these all go down this column that you are going to draw on your notebook right now under assets. So you're going to put something like this. You're going to do assets here, right? Assets, can everybody see this? You're going to do assets. You're going to write out everything that you own over here and the approximate value of these assets. All right. And then on the second column, what you're going to do is you're going to put down your liabilities. Liabilities. So what are liabilities? Liabilities are things that you need to pay off, your debt obligations that are owned by you. So for example, what are liabilities? By the way, there are two different types of liabilities. We have current liabilities, anything that you must pay off within the next 12 months. This could be your credit card, unpaid bills, any sort of funding that you have been taking on to invest in yourself. Hello from Darien. All right. Long-term liabilities is anything that you must pay off beyond the next 12 months, like a mortgage on your house, your car loan. So the first challenge today is completing these two to the best of your understanding, then calculating. This was the goal for today. The goal for today was to calculate your net worth. Your net what? Your net, put in the chat box your net worth. So what is your net worth? Your net worth is the difference between this column that you just put in your assets and the liabilities on this column. This is my remarkable notebook that I didn't know I can actually move it up and down. You can apparently move it up and down. So assets minus liabilities is your net worth. That is the difference. That is what shows you where you stand today financially, and is a very important number that you need to always keep an eye on. So this was going to happen. After you calculate all of this, you are going to get some kind of a number, right? And so the good news is, if your net worth is positive, that means that you are ready to get started with investing. If your net worth is zero or negative, that means that you need to increase your income, which is something that we're going to talk about in our challenge that is starting tomorrow. It's a 5-day challenge starting tomorrow. Go to yourwealthnow.com to grab your tickets. We're going to dive super deep into building a wealth ecosystem. But whether or not your net worth is zero or negative, that basically means you need to increase your income. Now, hey, even if your net worth is positive, you probably still want to increase your income, because the more income you bring in, that means that the more you can invest and compound that money. That is like literally the essence. It is very simple. I understand that it's like, okay, really? I need to increase my income and then I need to invest. Yes, it's that simple. And we're going to talk about how to increase your income if that is what's got you stuck. And then we're going to talk about how to invest your money if that's what's got you stuck. But you need both. You literally need both. That is how millionaires become millionaires. They have both. If you just increase your income and don't invest it, if you just invest with low amounts, you are not going to get to the $1 million status fast enough. You need both. Right? So that is what we're going to talk about tomorrow. But today, let's go back to the personal finance situation, your money situation. So we just talked about your balance sheet or your money situation. And it's a very cool figure to know about. And it's very exciting. It has a ton of important stuff that you're going to say, oh my gosh, this is what's happening with my life. These are my assets and my liabilities. But it also has a little bit of limitations. If you only look at your balance sheet, if you only look at your net worth, you're not going to be able to understand why or how an asset increased in its value. Did you buy more, or did the asset appreciate? Did it depreciate? Why or how an asset or liability appeared on your balance sheet year after? Did you purchase an asset? Did you inherit an asset? Did you lose an asset? And it doesn't also explain, your balance sheet doesn't explain the changes in your net worth. Was it because you increased your income? Was it because you added to your savings? Was it because you added to your emergency fund? Was it because your asset appreciated in value? Like if you have an NFT, if you have a real estate, did it appreciate? Did it depreciate? Was it a debt retirement? And because of these limitations, there's another thing that you need other than your financial statement to explain the changes between your balance sheets every year. So you might go through your balance sheet and understand your net worth year after year, but then you want to understand how these changes, you want to basically keep track of how these changes happen so that you can decide what to do with your investments, with your taxes, with your trust fund, with your income, with all the good stuff. And so this thing that I'm going to talk to you about that is going to help you understand these kind of differences is called, boom, boom, you know what it is? It is the statement of your income and your expenses. Statement of income and expenses. So we're going to change this intimidating term because a statement of income and expenses is just so intimidating. You don't need this fluff. We're going to call it to my cash flow situation. My cash flow situation. So you're going to understand what is your cash flow situation. The cash coming in is the flow of cash. And the money coming in, the money coming out. Now, if you don't have a job, or if you don't have a side hustle, if you don't have a business yet, you need to have your own business. We're going to talk about it in the challenge tomorrow. yourwealthnow.com. You guys, you need to get your tickets. I'm telling you, it is going to be amazing. But if you don't have these things, or if you're retired with no revenue streams, then you probably don't have any income coming in. And that will put a big old zero right there in your cash flow situation. And we obviously always want to keep the cash flow positive, whether you're retired or whatever your situation is. You need to come up with a way to keep the cash flow positive so that the money coming in is greater than the money going out. It is super important that you get this part correctly. If your cash flow is negative, again, don't worry. We are going to teach you how to increase your income in the Start Building Your Wealth Challenge tomorrow. Just go to yourwealthnow.com. I'm not sure if I'm getting, look at this. I wasn't getting the chats here on Instagram. All right. So, water emergency. So the statement of your income and expenses present income and expenses over a period of time. So what you want to do is in the next page of your notebook that you had here. So on the first page, we just found out your net worth. You put your assets, you put your liabilities, and the difference between the two was your net worth. If it was positive, it's awesome. If it was negative, you're like, oh my gosh, it's okay. We're going to help you increase your net worth. Now, in the second page, you have your statement of income and expenses, presented income and expenses over a period of time. So what you're going to do is write down everything that, all right, so let me give you some examples. Let me give you some examples over here because I know, okay. So under the statement of your cash flow situation, you're going to put one column. So you're going to draw one column over here, and it's going to be your income. It's going to be your income, right? So you're going to have one column over here. It's going to be income. And you're going to put in your salary, interest from the money in your bank, dividend payments that you may be getting from your investments if you're already investing, and your side hustle or business income. So for example, for me, in my income column, I have a ton of things coming in. I have 7 different revenue streams. So I have my book commission that comes in because I have now 3 best-selling books, and Cryptocurrency Investing for Dummies is just paying me a ton of money. My new book, $1 Million Family Secrets, just became a Wall Street Journal bestseller. So it's been super amazing, and these have been paying me a check. So that is like one thing that I add in my income. I get paid based on YouTube ads. So I add that to my income. I add that on a monthly basis. I have a business. It's called Invest Diva. So everything that I have an automated webinar that we are going to talk about during the 5-day challenge, how you can have a passive income like me as well that is creating me $500,000 per month. So I add that in my income column. What else do I have? I have dividend payments that come in. I have, well, right now I'm not actually taking profit from my investments. So that is not really income. It's just unrealized income. So I'm not putting that. The unrealized income of your investments don't go in your income column, by the way. So keep that in mind. So any other income that you might have from your business, from your salary, from your side hustles, whatever it is that you're doing, goes in the income column. Now, then on the second column over here, you're gonna have your savings. All right, my daughter just arrived in my room, and I'm I love you, mommy. I love you. I love you. I love you. So on the second column, we're going to have your savings. You're gonna have your savings. What are your savings? Any deposit to your retirement account, any deposit to your education savings, any deposit to a brokerage account that you have have set apart for your retirement. Just can you please go with daddy because I'm having a lunch. All right, if you want to sit here and be really quiet, you can be very quiet over here. Mom problems right here. Okay. So on the second column, you're going to put your savings, 401k savings, anything. And then on the third column, what you're going to put in is your expenses. Bum, 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 expenses. So this is going to be your variable and fixed expenses on a monthly. So, oh, by the way, so income, savings, and expenses, your cash flow situation, you can do it on an annual basis, on a monthly basis. It doesn't matter, but they all have to be in the same time frame. Does that make sense? Put a Y in the chat box if this has been so far valuable to you. Put a Y in the chat box if this has been valuable. And then we're going to go to the next step for those of you who are just tuning in right now. What I'm showing you is how to calculate your risk tolerance so that you can create investment strategies that are just right for you and for your financial situation. All right, let me actually put this a little bit lower. All right, this looks better already. Okay, so we got our balance sheet, your cash flow situation, and again, I go super duper deep into this in our Power Course training, but the purpose of today's live event is to get you moving forward, even if you don't get it perfect. So I bet you already have an understanding of where you stand financially, and like just adding these numbers into your column. I want to know, are you like excited? Like, oh my gosh, how many of you are net worth positive? How many of you had a positive net worth in our first exercise? Put a P in the chat box if you were net worth positive. I also want to know how many of you were cash flow positive. Put a CP, so I know you're cash flow positive, CP in the chat box if you were cash flow positive. Now, for those of you who are net worth positive and cash flow positive, this is amazing news because that means that your ability to take a risk is higher than people who may be in net worth zero or like balancing out or cash flow negative. And guess what? There is no problem if you are cash flow negative. And now your risk tolerance, your ability to take a risk is going to be basically the higher your net worth, obviously, the higher your risk tolerance. The bigger your cash flow, the bigger the money coming in compared to your expenses, the bigger your risk tolerance. Because guess what? That is going to allow you to set aside an emergency fund for yourself, right? Aw, I love you too. An emergency fund for yourself so that you don't get panicked when the markets go up and down. Now, let's talk a little bit about your risk tolerance, because when you get started with your investment strategy, if you know your exact risk tolerance, it is going to help you chill and invest with confidence instead of constantly looking for some sort of signal from a guru or the news, right? So I I obviously have a choice of going down the rabbit hole and get you to the ratio analysis and pie chart analysis. There's a little bit more into it. Again, we go super deep into this in the Make Your Money Work for You Power course, but obviously I can't just give you my Excel sheets on a live here today on TikTok, Instagram, and everywhere else. However, for those of you who attend my free masterclass, you probably have received my free risk management toolkit that gives you the Excel sheets, because I can see here some of you are asking for the Excel sheet. So if you go to investdiva.com/masterclass, there's this free masterclass that happens at 8 p.m. that if you attend and stay until the end, you are going to get the risk management toolkit with all of the 6 Excel sheets that you need in order to get your personal finances ready and do it for yourself and for your family so that you don't know where you are. So if you haven't received your free risk management toolkit from me, just go to the masterclass. Is pre-recorded. It happens every day at 8 p.m. and probably like 5 minutes from it happens twice a day. So just go to investdiva.com. The link is also in my bio, by the way, you guys. If you're on TikTok or on Instagram, the link is in my bio. But if you go to investdiva.com/masterclass, you can attend. You can register your seat for today's masterclass at 8 p.m. Eastern time or your time. And if you stay until the end of it, you are going to get the free risk management toolkit with all of the Excel sheets so that you can get ahead with your personal finances. So, but right now, I just wanted to walk you through about the most important things, because your risk tolerance, guess what your risk tolerance is? Your risk tolerance is not just your ability to take a risk, and it's not just your feeling about, oh my gosh, oh, I'm a very nervous person, or I know I'm a gambler, I have high risk tolerance. It is a combination of both, plus one more thing that I'm going to get into. So what is your risk tolerance? Your risk tolerance is your ability to take a risk plus your willingness to take a risk. Your ability was what we just talked about. We talked about your personal financial situation, your net worth, your balance sheet, your cash flow situation, your and the money coming in and going out, and a bunch of other things that you're going to get once you attend the free masterclass. And then there's also a questionnaire that you need to fill out to understand what exactly is your psychology when it comes to risk, because each and every one of us are different. So for example, I earn over $1 million per month. So of course, my ability to take a risk is super high. But as a person, as a mom, and based on like my age, I'm like 37, right? I have a moderate willingness to take a risk. Like I personally, my personality is a little bit low risk. So together, it actually brings me to medium risk tolerance when it comes to investing. So I don't go day trading. I don't go take like I don't trade options, right? I started with $500 for those of you who are asking. I started with $500 and now I'm at $7 million. But it's not just investing. It is having a wealth ecosystem, which is what I'll be talking about in the Start Building Your Wealth Challenge. That starts tomorrow. It's a 5-day challenge. Again, if you haven't got your tickets for that, there are 2 things that we have right now. It's the free masterclass, which is solely for investing. And then we have the 5-day challenge that starts tomorrow. It is live, that one. So you have to, we don't do it that often. And so that one starts in 18 hours. You want to get your tickets. Again, the link is in my bio, or you can go to yourwealthnow.com and grab your tickets, and I'll see you tomorrow live, hopefully. But so those are the 2 different things. I digress. All right. Digress, whatever the word for it is. All right. So the questions that you need to ask and understand what your ability to take a risk is this. Number 1, is your net worth positive or negative? We just calculated that, right? Yes, I do have a cold, and I'm trying my best to keep up my energy and give you as much information as possible. So if you don't like my nasal congestion, then you are free to leave. All right. Yeah, I'm doing my best. I decided to show up for you guys today, even though I have a cold, and give you some information. If you don't like my voice, then feel free to leave. No, we can still be friends, but you don't have to listen to me if you don't want to. All right. So if your net worth is positive by a lot, your ability to take a risk is higher. If it's negative by a lot, then your risk tolerance is lower. If it's break even or somewhere in between, then your risk tolerance is somewhere in between. The question number two that you need to ask yourself is, are you cash flow positive or cash flow negative? You already put in the chat box whether or not nasal congestion matters. I love you guys. You guys are super awesome. So if your income exceeds your expenses, then you're cash flow positive and therefore a higher risk tolerance. If your expenses exceed your income, then you are cash flow negative and therefore lower risk tolerance. Right? Everybody with me? You can't wave your hands with me. So put a W in the chat box in the comments if you're with me, if this is making sense. And then the third question that you need to ask yourself is, do you have an emergency fund? What is an emergency fund? Again, emergency fund is something that depends on your risk tolerance and your age. Typically is somewhere between 6 months to 12 months of your necessary expenses, essential expenses, saved somewhere safe that is exchangeable to cash rapidly. So if something hits the fan, then you can go ahead and take that emergency fund money and do something with it, whether start your own business or pay for your expenses or whatever it is that is going to grab you out of rock bottom and put you back on track. So you need an emergency fund. If you have a huge emergency fund and then some excess amount just laying around in your savings account, then you must start investing ASAP, as soon as possible. And it also gives you more flexibility with your risk tolerance. Now, investing comes in different forms. One of my most favorite types of investing, what do you guys, I want you guys to take a guess. What do you guys think my favorite type of investing is? Like if I have no money, or if I have just like some money and I want to start making money ASAP, what do you think I would invest in first? What is the first thing that I would invest in? And this is a little bit of a catch question. I wonder if you guys have been following me for a while. Attorney Nick Gio just says, you bought my course yesterday. Yay! Congratulations on joining 3,500 people in the Power Course, and congratulations, you are going to be our next success story. Okay, we're getting guesses over here. We're getting real estate, equity, stocks, crypto, yourself. We're getting some answers over here. We're getting dividend stocks. All right. So the answer for those of you who got it is correct. It is investing in myself. So when I got fired from my job and I actually didn't have an emergency fund, I didn't go and start trading. I actually invested in myself in a high income creating skill. And that for me at the time was learning how to read from a teleprompter. It obviously goes to your passion as well. So I invested, took a course to learn how to, and English is my third language, so I didn't used to be able to just speak like this without notes in front of me. So I went ahead, invested in myself, went into debt, invested in myself to learn something that I knew was going to create cash flow for me. So I learned how to read off the teleprompter, and boom, I got a job on Wall Street, reading off a teleprompter and making some money. Now, again, for those of you who think reporters make a ton of money, they don't. But that was my first investment. So the first thing that you do is invest in yourself, increase your income. And once you hit a level of income that you can now leave your emergency fund alone and survive on your income and then have some leftover, that is when you can go ahead and start investing in the financial markets, whether it's real estate, cryptocurrency, and ETFs, NFTs, stock market, whatever it is for you, that you are going to know what is going to be the right kind of investment for you, depending on your risk tolerance. That needs to become after you have invested in yourself and you have increased your income. Some of you have been asking, what is this record over here on my wall? This is my Tucumma Club Award. This is when I made $1 million from one of my side hustles, $1 million revenue. And thanks to the internet, basically everybody can get in have a passion, learn something, and start increasing your income. And by the way, for those of you who don't know or just joining us, that is exactly what we're going to cover tomorrow. For those of you who are asking about my coaching sessions, I'm going to be live for 5 freaking days, Monday, Tuesday, Wednesday, Thursday, Friday, starting February 7th at 11 a.m. For VIPs, I'm going to do live coaching for you guys to start building your wealth. So if you haven't already, go grab your tickets, for God's sake. Oh my goodness, it is going to be mind-blowing. Every time we've done this challenge, it has been absolutely mind-blowing. It is money back guarantee if you attend all 5 days as a VIP and have your video over. So that is what I'm going to like. I'm going to be answering your questions. I'm going to offer you coaching. I'm going to show you the exact steps you need to take to start building your wealth. So if you haven't already, go ahead, go to my bio, click on the challenge link, or go to yourwealthnow.com, yourwealthnow.com, and grab those tickets, and then come back here, because we're talking about now your willingness to take a risk and other things that you need to do before you start investing in the financial market. So if you don't have increased income, you are not allowed to invest in the financial markets. Now, don't get me wrong. If you start investing, even if it's $50 per month, it is better than not investing. But that doesn't mean you should stop like increasing your income until you hit financial freedom. Does that make sense? The coaching is for beginners. So the challenge, you guys, that starts tomorrow is basically for anybody who is interested or is already in an online business and want to take their business and income and wealth to the next level. So this is for you if you are thinking about quitting your job or starting a side hustle, but I don't know where to get started. This is for you if you're already a coach, if you already have a business, but you haven't been making millions of dollars per month, because I make $1 million per month. I'm going to show you how to make $1 million per month. This is for you if you haven't started invest. Actually, no. Yeah, this is for you if you haven't started investing yet. This is for you if you've started investing but you haven't hit $200,000 yet. So this is basically for anybody who wants to get to the next level. Anyone from zero, literally, to $1 million in annual income who wants to get to the next level. These principles are going to help you create a wealth ecosystem, because if you aren't making $1 million per month right now, it's probably because one of the elements of your wealth ecosystem isn't working. So through these 5 days, I'm going to show you exactly what you need in your wealth ecosystem, and you're going to figure out what is missing, and you're going to create a wealth ecosystem that is going to build you generational wealth. Does that make sense? So that is what this challenge is going to be about. Now, I know I digress a little bit. We're talking about personal finance and your risk tolerance. We've been live right now for almost 37 minutes. But those of you who are just joining, let me recap what I've been doing. What we just did, we calculated your personal financial situation, your balance sheet, your net worth, and your cash flow situation, right? And you now have an understanding of whether or not you're cash flow positive, net worth positive, and where you stand with your risk tolerance, all right? And then we also talk about emergency fund. So how many guys have somewhere between 6 to 12 months of emergency fund already saved? Put an E in the chat box if you already have an emergency fund. I would like to know. Put an E in the chat box if you already have an emergency fund. How many of you have an emergency fund? We have some E's over here. Can you coach me? You guys, I'll be coaching you guys for 5 days starting Monday. Go grab your tickets at yourwealthnow.com. Okay, so a lot of you guys have an emergency. That's amazing, amazing news. So now you have to figure out, what is your willingness to take a risk? Because guess what? Like, people ask me, okay, Kiana, give me that one stock that you would invest in. And the problem is, what works for me may not work for you, because we're different people. Not only my ability to take a risk is different, my willingness to take a risk is different. My age is probably different than yours. My psychology is different than yours. My family situation is very different than yours. So for that reason, what works for me may not work for you. So this is how your willingness to take a risk could change. All right. So your risk tolerance depends on your life cycle. So for example, if you're between the ages 25 to 45, 25 to 45 people, wave at me. You are probably in more growth oriented phase of your life. So 25 to 45, you're growth oriented. But even then, big life events if can change your risk tolerance. For example, my risk tolerance was higher before my daughter was born because I was just like single, ready to mingle. So my willingness to take a risk was higher. But then after my daughter was born, I was like, oh my gosh, I'm a mom. I need to protect my daughter. So my risk tolerance, my willingness to take a risk went lower. Again, you guys, I apologize for my nasal voice. I have caught a cold. Every time we have this challenge, I feel like I have a cold. I don't know what it is. I think I'm retracting it to myself, but I have showed up to you for you today so that I can provide some value for you, hopefully. But at the same time, after my daughter was born, so right now, for example, I'm making insanely more money. So even though my willingness to take a risk has gone lower, my ability to take a risk is just like super high. Like I'm making $1 million freaking dollars per month. So obviously my ability to take a risk is higher, even though my psychology is lower. Does this make sense to you guys? Put a one in the chat box if this is making sense to you. Thank you for all of your words of support. For those of you asking if this is recorded, I believe this is being recorded on Instagram and on YouTube. I will share the replay of it on Instagram. All right, so we're getting some ones and some twos. If this is not making sense, all right, let me explain. So if you're between the ages 45 and 60, you are potentially conservation and protection oriented. Above 60 is probably going to be a retirement year. So you're going to be concerned about generating income, passive income without having to work, and protecting what you have, right? So how many guys 45 and above in the house, wave at me. Let me know where you are. And for those of you who are 45 and above, again, still, it's not too late. You can totally start doing this. Like I went from 100K to $5 million within a year. So if you figure out exactly what your wealth situation is and create a wealth ecosystem that is suitable to you, market crashes don't matter. Like nothing literally matters because you have a wealth ecosystem. For the Persians in the house, I'm speaking English. If you don't get it, just get out. We don't have a Farsi segment right now. Unfortunately, my courses are only in English at the moment. All right. So now that you know that your age, how your age might change your risk tolerance, your willingness to take risk, then the third thing that you need to ask yourself, now you know your ability to take a risk, you know your willingness to take a risk. What is the third piece of advice that I can give you? This is a very important thing. The majority of financial advisors and money managers don't talk about, and they don't want you to even think about it because they want to manage your money. That's a different topic for another day, and they don't have your best interest at heart. Let's leave it at there. But so the third point comes down to your knowledge and your confidence in the asset that you are investing in. So somebody here on TikTok is saying market crashes make people rich. Buy low and sell high. Exactly. But here, how you can take advantage of it without having a heart attack. Because I know it's super scary to invest in stocks or cryptocurrency or any asset when the prices are dropping. I mean, the idea of it is nice. Like every time the markets are at all-time highs, you're like, oh my gosh, I don't want to buy because it's super pricey. But the moment that it starts dropping, you panic and it's super hard for you to buy. And this that I'm about to tell you is the reason why you are panicking and how to avoid doing it. It all comes back down to your knowledge of the asset that you're investing. So go and do your homework. Don't invest in things that you don't understand. Invest in things that you know first. And then ask yourself these two questions. Do you guys have your notes ready? Have your notes ready? All right. So these are the two questions you want to write down. All right. The two questions that you want to write down is this. Number one, if you invest in this asset right now today at current market price, and then its price dropped by 50% tomorrow, will I freak out and panic sell, or will I buy more? This is question number one that you want to ask yourself. So if you don't invest today, question number two is this, right? If I don't invest today and I hear that my favorite asset, my favorite cryptocurrency, my favorite NFT is skyrocketing, will I catch FOMO and buy immediately, or will I wait for a pullback? So this is very personal, and it really all goes back down to your knowledge of that asset and your long-term, big picture view of understanding the category of that asset and where it's going to be the 5 or 10 or 20 years from now. So if you freak out and catch FOMO, then your risk tolerance is low. Go learn more about that asset. If your answer is, no, I'm going to have control over my emotions, I'm going to be patient, then your risk tolerance is higher. Congratulations. If you're somewhere in between, again, your risk tolerance is medium. Does this make sense? All right. You guys, we are going to dive super deep down into all of these things and more. Day 2 of the challenge, we're going to talk all about investing. Day 1, we're going to talk about the science of wealth. Day 3, we're going to talk about income creation and creating a Zen wealth generator. How many guys want to have a Zen wealth generator that creates generational wealth for you for the years to come? If that's you, you want to go to yourwealthnow.com. You want to go to yourwealthnow.com and accelerate your portfolio. Grab your tickets. Our challenge starts tomorrow, you guys, at 11 a.m. If you're a VIP, you're going to be able to come on live, have your videos on, and ask me real questions with your voice, and I'm going to answer your questions. We have limited seats available, so 100% I would totally recommend that you go ahead and grab your tickets. If you are VIP and if you attend all 5 days, here's our money back guarantee, you guys. If you are VIP and you attend all 5 days, and at the end of the event on Friday, you believe that I didn't provide you 10 times more of your VIP ticket price, we will give you full money back guarantee. This is how confident I am that I'm going to respect your time and create value in you. And if I didn't create value for you, I don't deserve your money. We're going to give you money back, but you have to attend live. And if you're not making $1 million per month yet, and if you're saying, oh my gosh, I'm busy, I can't attend live, then tell me, what is it that you're doing in the next 5 days that is more important than learning how to make $1 million per month? Because I don't know if I don't know what else is important. So talking about investing in yourself, this is your chance to invest in yourself. Go to yourwealthnow.com. If you're on TikTok or on Instagram, go to the link in my bio, click on it. The second button is the challenge. You want to grab your seats for the VIP, because that is the only way that if you don't like what I said, you can get a money back guarantee. The VIP is $297. The general admission is $97. So what is happening here with Persian Speak over here? So you guys, I'm going to take some rest, get some energy for tomorrow, and we're going to bring on some first class value to teach you how I went from $0 to $5 million after I got fired, even though I'm a busy mom. how I created a Zen wealth generator for myself, and how you can do it too. If that's you, if that excites you, if that is valuable to you, then go ahead, go to yourwealthnow.com, grab your tickets, and I will see you tomorrow at 11 a.m. and for the 5 days after that. See you tomorrow, and bring on your questions. I'm going to answer all your, I'm going to try. Well, VIP is going to get sold out, as I think at this point, but I'm going to try to answer as many questions as possible. But anyways, it's going to be super cool. I'll see you guys tomorrow, and have an amazing night.